Hello, and welcome back to Coin Lady channel. We will be addressing Ripple and XRP, two digital currencies that are widely used in the financial and cryptocurrency sectors. Now let us begin by discussing a few topics. Buzz this week has been pretty fantastic. Attention, there have been some major developments in both the traditional finance industry and the cryptocurrency market. Nonetheless, I hope to discuss a few things in this video. What I'd like to talk about instead is the regulatory battle that's brewing in the United States over cryptocurrencies, how things are developing elsewhere, and the overarching strategy we should adopt. Let's take a look back at the announcement made on November 9th about BlackRock registering an Ethereum trust in the state of Delaware in preparation for the impending adoption of the Digital Asset Transfer Tax Act, ATF, the Ethereum blockchain, and BlackRock's $9 trillion in assets under management. BlackRock's announcement earlier this year that it had filed with the U.S. Securities and Exchange Commission to create a spot Bitcoin ETF caused quite a stir, and a week before the historic ETF filing BlackRock iShares Bitcoin Trust, analysts from Bloomberg confirmed the company's iShares Ethereum Trust. So, this is the official word, and further down we can view the full filing. The fact that this outlook is bullish piques my interest. Is it as bullish for the immediate term as you claim? In my opinion, this is good news for anyone who already have cryptocurrency stored in cold storage. I see this as a cause for optimism. What gives? I could make wild assumptions all day, but I think major players like BlackRock are entering the market and applying for large ETFs. I don't think it's as bullish as people are making it out to be. The major custody issue has arisen, and self-custody in particular is under investigation and can be a matter in light of recent crackdowns on cryptocurrencies. Please leave your responses in the box provided. Let me know what you think about this, because there will be no middlemen and no limits on where the money can be spent. If you're the sole decision maker for your own bank account, you'll have total control over it. You are your own personal bank. And this is what we're talking about all of a sudden, no banks. Suddenly, the major banks say, well, we want to take care of your bank account. Would you still say that now that you know more about the banking industry? Do you believe that's right? The correct response is no, followed by, I want to be my own bank, from the vast majority of you. Just how does this deviate from being true? While many large financial institutions, including BlackRock, Vanguard, and State Street, have begun offering cryptocurrency custody services, the vast majority of cryptocurrency investors still choose to keep their funds elsewhere. These exchange-traded funds, ETFs, are analogous to custodial services in that the issuers will hold a substantial quantity of digital currencies such as Bitcoin, Ethereum, and others. Perhaps one day an XRP exchange-traded fund will be established. There are a lot of people offering their opinions on how optimistic this is, and how much the prices will rise. What are we really losing here, even if the price does soar temporarily? One of the primary problems I have with this region is that, for the first time in history, we have something decentralized and unregulated concerning cash. However, I'm concerned that this is shifting at the moment. I'm concerned that we're giving away decentralization to market powerhouses like BlackRock, which already owns nearly all of the corporations, and doing so out of apathy or indifference. The thought, oh, this is going to pump this immediately comes to mind. In the grand scheme of things, what are we really giving up? That is why I am concerned about it. In all other respects, however, it would appear that the spot ETFs are comparable. Here, SEC approves 12 spot Bitcoin ETFs today, including the Chadstone Grabber Spot ETF, which has been showing losses. In addition, the SEC could give the green light to all 12 Bitcoin ETF registrations that have been submitted between November 9th and November 17th. The fact that these megacorporations are trying to beat these ETFs when we just recently went through something similar is even more preposterous. A U.S. Treasury official named Justin claims that the Biden administration is lobbying Congress for more power to regulate digital currencies. What makes this noteworthy to begin with? This is actually rather bullish. We may have already covered this ground. For years, China and India were striving to criminalize cryptocurrencies, And each time they made an announcement about it, the market would shudder a little bit before suddenly turning green and becoming enthusiastic. Such a development is fantastic for the cryptocurrency market as a whole. However, I bring this up because it seems that 2.0 is still a major bottleneck. Is that what you mean? And the end game is to give cryptocurrency control to the suits on Wall Street, right? The ruling class, for instance, seeks the absolute right to space. And I think this explains why there appears to be a huge regulatory war happening in the cryptocurrency industry, which is why there have been such large-scale crackdowns. What about after that, with all the major changes coming to cryptocurrency regulations and the crackdown? There is one fascinating subject to cover. It all seems like a political chess game. You all know that I don't care much about politics. Whether you identify as red or blue makes no difference. It makes no difference. But I will say this, the Democratic Party looks to have launched an all-out assault on cryptocurrency legislation in an effort to seize control of the business. They're hoping for a virus. What's more, the Republican Party isn't exactly a model of competence, is it? Honestly, it's a huge problem. Just like politics, it has no place in cryptocurrencies, however, it won't. Despite this, a discussion has opened up concerning the reasons behind the crackdown and why cryptocurrencies are being singled out. What gives with the cryptocentric harassment? Is there a strategy to get rid of this type of investment? They want the major banks to go through it and the major interruption, right? First, they won't be able to eradicate cryptocurrency because, sure, technology always wins in the end. Unless that occurs. For this reason, and because BlackRock has $9 trillion in assets under management and is now attempting to get into these ETFs, I don't think we should be sitting here and rejoicing in the fact that you know them. You believe that institutional investors like BlackRock, Vanguard, and State Street are driving the current efforts to regulate cryptocurrency. These corporations have also engaged in market manipulation for a considerable period of time. As if that weren't enough, on November 8, Brad Garlinghouse gave us some great insight with a video in which he concluded by saying that despite Ripple's success, the United States is still so anti-crypto that American banks won't deploy on-demand liquidity, taking a cue from Anderson, here. This is interesting, but it shouldn't come as much of a shock. Also due to falling XRP prices. The reasons why US banks have been resistant to adopting on-demand liquidity and other cryptocurrency-based solutions are, of course, crucially important to understand. This is because of the continued anti-crypto stance held by the United States. But give this video around 5 minutes and a half of your time. Therefore, if it moves too quickly, I will increase the speed to 1.5x. Given that it lasts for more than 5 minutes and features a live discussion, feel free to take your time watching it. A positive conversation is going on. The United States' once strong reputation for consumer protection and securities regulation is now widely perceived as a political liability, in my opinion. The SEC's handling of this situation gives the United States a bad reputation abroad. Unless more countries, the United Kingdom included, decide to join the OA later today, we have no plans to leave. 5 or 6 countries, including Singapore, Switzerland, Japan, and perhaps Australia, come to mind, though. All of the top-rated countries are here. As a result, financial resources have been invested. You see business owners setting up shop in these countries because of the transparent laws they offer. Before we get back to the comparison of the United States and the rest of the world, let me quickly explain something. You basically threaten to go to the Supreme Court if it came to it. If the SEC appeals, you will have to fight them in court until the matter is settled. You will never give in and accept a compromise. That, however, is a different story. Look, we've already had a public exchange of views. I was offered a settlement before I even realized they were suing me instead of merely causing a ripple. Sure. Because of the lawsuit they filed against me, I believe that everything has been unfairly criticized. So, that's an awesome sensation. The question of how we arrived at this point arises. You even sued me like it was an open and shut case. People in the legal industry know more than I do about the implications of selling XRP as a security, which is why I had to do it, but there was not the slightest chance that I would win. The SEC's approach to the problem also suggests that it should be part of the solution. In other countries, there are no concerns. You also seem to make light of my visit to the SAW today. At least I hope you were joking. That wouldn't fly in another country. I've met with central banks, you mean the regulator, right? And every time it's been pretty much like, yeah, no problem, open meeting, open dialogue, during which we talk about the activities of Ripples and our thoughts on the cryptocurrency field. There is a case in the United States when the rules are crystal clear. We still haven't figured out if Ethereum is a security or not. The chairman has not asked for anyone's honest view on the topic, nevertheless. Re-ask him about it today. If you happen to be conducting an interview today, I will let you know if I am able to spot him behind the curtain. Because you were just mentioning it there, that's why. Let's talk again about the United States' relationship with the rest of the world. Where do you think the best illustration is shown? Does the United States have anything to aspire to? Or maybe they just need to take a different tack with regulation, like our close political and economic partners in the United States and the United Kingdom, which I think has benefited them a lot with Bitcoin. And they're not what I said. Chair Genzo often makes analogies between the cryptocurrency market and the Wild West. This is nothing like the Wild West. The entire globe. In a number of countries, Ripple operates under strict regulations. We are a Singapore-based private payments provider with a valid license as of this past May. We plan to apply for virtual asset regulation in the United Kingdom, or Dubai. I can't quite place the A, in the near future. But this isn't the Wild West either. Moreover, I think this is more of a tale to advance a political purpose than a sensible policy. In addition, I think the United States still has a chance to play a leading role in this area. In addition, a few of the largest cryptocurrency companies in the world have their headquarters here. But if Brian Armstrong were here today, I think he'd also address the question, does he wish he had gone public in a different jurisdiction in the United States? In addition, the SEC sued him for conduct they were aware of even after they had approved his S-1. Do you find any logic in that? Well, you recently stated your belief that the United States still has competent leaders, right? How much longer will this take? Which cold place are we currently in? I just want to be realistic, so let's be honest. When compared to its current position in terms of global GDP, 23%, the United States' potential to become such a large economic actor in the years ahead, provided it puts itself together, may appear like an always available alternative. The financial center of the world, indeed. But there aren't very many other major financial hubs throughout the globe. Without a doubt, Dubai is aiming to overtake the prominence of London and Singapore. I've been very forthright about the fact that non-Americans will make up the bulk of this year's hires. So this doesn't surprise me at all. It's probably because I'm having a hard time adjusting to life in the United States. Therefore, I see no reason to continue to expand my staff there. Even with the SEC case, and especially since the SEC case, I have spoken with them and said, all right, excellent. Furthermore, we have US banks as clients. We have introduced a product called on-demand liquidity that makes use of XRP. So I'll go up to those financial institutions and ask, shall we talk about that? Look, the US government is still against cryptocurrencies, even though you won the lawsuit. American banks will not make a substantial investment in the cryptocurrency market while the OCC is against it. That's why I don't think the United States can be a world leader anymore. But it seems to me that these other markets are constantly on the lookout for entrepreneurs, as they aim to grow. Again, I'll be focusing on Singapore, London, and Dubai as illustrative cases. However, our London branch is the company's second largest location, but you make an excellent point there. That's all I have for you. I've been listening to Brad Garlinghouse for well over a decade, and this is yet another shocking revelation from him. Now, He and the rest of the Ripple team are in discussions with major financial institutions around the world. This explains why they were unable to deploy on-demand liquidity. They had begun discussions with our banks about doing so, but the United States remains unfriendly. That caught me off guard because we haven't moved on from our obsession with the SEC yet. We still think the SEC should base its choices on regulating cryptocurrency, as Gary Gensler argues. The SEC and Gary Gensler are not unknown to us. It's a total farce, so when I say we, I don't mean us. When I say our nation's leaders, I'm referring to those who look at Gary Gensler and see someone who is just as qualified for the job as everyone who came before him. We're talking about William Hinman and Jay Clayton, since money in the banking world talks louder than anything else. We're just not going to click with these guys. You can treat yourself to whatever you want if you're famous and affluent enough. Corruption has been for a lot longer than Ethereum and XRP have been there, which is why I bring it up. There have been a lot of problems here. Although there are problems, I find it ridiculous that Gary Gensler and the SEC are still preventing potentially game-changing innovations from reaching the market. These banks are ready to start risky liquidity operations whenever they're needed. Take Bank of America as an example. They're ready, and they always have been. It's likely that they've been considering implementing on-demand liquidity for at least 3 years. However, they have been unable to do so because of the US government's hostility toward cryptocurrencies. With a single comment on FTX yesterday, Scott Melker, the Wolf of Wall Street's Gary Milder, inflated the FTX coin by over 100%, which I find even more ludicrous given that he only changed the price of a cryptocurrency. By obediently classifying them as unregistered securities and initiating legal action against various exchanges, of course. There has only ever been one person who has manipulated the price of cryptocurrency assets, and he crushed several altcoins in the process. I agree with you 100%. In case you didn't see it, here's the comment we made. SEC Chair Gensler said the ex-NYSE leaders' plan to revive FTX is possible if done legally. If this were anyone else, say, Brad Garlinghouse, and they said, hey, we want to reboot FTX for an example, that plan would be completely shut down. The only reason this is getting pushed through is the same reason I began the video talking about BlackRock and big announcements that we're seeing on crackdowns happening as guests. But because it's an ex-Wall Street player, for an example, this is getting talked about, this is getting explored, and it's saying it's doable. Let me know what you think in the comments below. I find it utterly bizarre that people like Gary Gensler and the SEC are still making judgments about crypto. If you liked the video, which I hope you did, please hit the like button. Sign up for the video's notifications. See you later, bye.